Do you need insurance or answers for insurance questions like, I have recently been laid off and have been offered Cobra. What do I do for health insurance? Or how about this question? My boat insurance is coming due. What should I be covered for? The answers for these questions and more will be discussed tonight on Understanding Insurance. It's Thursday, May 2nd, 2019, and welcome. Welcome to Understanding Insurance, a live video blog brought to you by Guyor Insurance Agency and Insurance Benefits. Well, hey folks, how are you doing tonight? I appreciate you joining me, and I want to introduce myself. My name is David Guyor, if you haven't already seen one of these videos or you don't know me personally. And I am the owner of Guyor Insurance Agency and the Vice President of Marketing and Management for Insurance Benefits Unlimited, which we just call IBU. And I want to thank you again for joining me tonight. One of the things that I want to bring up is the purpose for this video blog. First, I want to help and educate folks like yourself. I know that insurance is a very boring topic, but we all own something in the insurance realm, and some of us own quite a bit of it. But just think about yourselves. I mean, we have car insurance, home insurance, if you've got any toys, boats, RVs, or even if you have a health insurance plan. We have lots of these things. So this video blog is to educate and help, hopefully, answer some of these questions that you might not know. And it is an open forum, so you can call in or you can text me or email me at the information you'll see here in just a bit. But the second reason that I do this video blog is I want to prove to you that I need to be your insurance agent. And what I mean by that is, let's call it kind of a concierge, and that is when you call, you're going to get me, not someone else. I don't have a receptionist anymore. That means when you call, you get me, no receptionist, and I walk with my clients hand in hand through their insurance problems and claims. Personally, you're my client. You're not the insurance company's client. And being an independent agent, I choose the insurance companies that I think is good, and A-rated companies, that kind of stuff, that will help both of us. But you're my client, and if you have to leave a message, which sometimes you'll have to do, you know, you will get a call back, period. So that is another reason why I would love to be your agent, because I think some of you can say, when I call my agent, I never hear anything back. So, but this video blog, again, is to educate and make you aware of changes in the insurance world and how it could affect you. And hopefully you will realize or utilize this format to getting answers on particular situations you might be in. And you can do that with live text. But this week's topic we're going to cover is, it's vacation time, and how does an insurance policy cover my personal items? So that is something we're going to talk about on this week's show. But first, we always like to go to this. Insurance that matters. That is what we titled this section. But here's what I was happy to see pop up on my screen today from Arkansas Blue Cross and Blue Shield. It said, you've been heard. What does that mean, you've been heard? Well, if you've watched any of these most recent video blogs, we were talking about a couple of bills that were coming up to through the Senate, through the meetings that they always seem to have right around this time of the year. And there was an SB 480 and another bill called the SB 520. And I'm just going to read what I have typed out. So Arkansas Blue Cross reports that Arkansas, basically they're saying wanted to thank all who have reached out to their legislator during the 92nd Arkansas General Assembly. Arkansas Blue Cross and Blue Shield reported, "Your voice was heard on SB 520 and the SB 480, and the amendments that resulted from your expressed concerns provided millions of dollars from being added to our state healthcare cost burden and reduced the financial hardship that two of these bills would have caused to Arkansans." And this other bill, you can see the name of it, the SB 520. But the 520 originally, the original version that was brought before the bill guaranteed a legislated mandate dispensary fee to pharmacists. This was something I had covered on a couple of video blogs earlier, which would have increased the cost of each prescription filled in Arkansas by an average of $10. That means, folks, when you went to the pharmacist to get a prescription, there was going to be a fee of $10, and it would have cost could have impacted $12 million to small businesses the first year alone, and it would have added more than $58 million in cost. Now think about that, folks. $58 million in 1 year in the cost for a fully insured product for the first year, and would increase premiums, and this would be to you and me through insurance costs. It would have it only said 3%. Doesn't sound like much, but you know, all of us would have been impacted by at least about 3%. Now, in the healthcare contracting stimulant bill, that was the 480. I just showed that to you earlier. The original version of this bill required health insurance companies' reimbursements to be the same for all product tiered to a specific network. And so, folks, what that meant was as originally drafted, it would have permitted discriminations based on types of healthcare coverages patients had and increased the likelihood, here's the key thing, of surprise billing. That meant that the insurance company, if it was not covered through your health plan, you could be billed by a specialist and so on. So I was glad to see that the language was basically changed. But the next topic, Leslie Ruffledge continues fight to strip healthcare coverage. Now, this is a Republican thing. A lot of folks know that Trump's campaign promise was to do away with Obamacare. And so the Arkansas Times reported that Arkansas Attorney General Leslie Rutledge, I always call her Rutledge, announced Arkansas joins Texas and 16 other states in a brief. It argued that the Fifth Circuit Court of Appeals to affirm the decision that the Affordable Care Act and its individual mandates are unconstitutional. And if any of you remember, that was kind of the Chief Justice Roberts. He was appointed by, as we referred to him as Baby Bush, was appointed to our Supreme Court, and he was the deciding factor that said, is Obamacare legal? And this is when Obama was in office. And to continue reading, it says, today Arkansas is one step closer to appending the unconstitutional law, said Attorney General Rutledge. The unconstitutional individual mandate was the backbone of the law, and without it in place, Obamacare cannot be upheld, and Congress must take action to increase health care options, lower costs, and protect those with pre-existing condition. So what we're dealing with, guys, is the sum of this thing is what it means to the common folks like me and you is the U.S. government has been using taxpayers' monies to subsidize, and that was the word they used. They subsidize really an overrated healthcare system, and so anybody that has Obamacare that gets some kind of help paying that's that tax that's our taxpayers' money that is subsidized. And so it was based on your income and how many people were in your household. So if you were a low income, or let's say you made pretty good money, but you just had a lot of people in your household. There was 4 of us, 6 of us total, me, my wife, and the 4 kids. And so we were subsidized a little bit more than somebody that might only had 2 kids making the same amount. So what a lot of the Republicans and our Attorney General is saying is if they can deem that that is unconstitutional on how Obama passed that, then these subsidy monies would go away. So folks like me would be hurt. But I don't think it's right that someone else helps pay some of my health care. I should be able to stand on my own. This stuff's just messed up, but I want to continue reading. So I basically put in here, by changing the law President Obama signed, these tax-paid dollars could no longer be used to subsidize one's Obamacare health plan, which would make it too expensive for the low-income person to keep in turn having to give up their health care. So that's the biggest argument you're hearing on the news, is that healthcare is it's out of control now, and if they do away with these subsidies, and that's why there's even some folks on this side of the aisle that says we don't want it to go away. We're used to it. We're used to paying the fees that we're paying. The healthcare costs have just spiraled to a point to where I don't even know what to do. People have asked me, "What do you think?" And I'm like, I say erase it all and try to start from scratch. We know that's never going to happen. So I don't know. Keep watching the show, and let's see if we can't keep you advised on what's going on. But today's topic, let's get right to the show. Today's topic is vacation time, and how does an insurance policy cover my personal items? But first, we had a couple of things that we were going to talk about. Let me get over here to my right slide. Sorry, folks, I kind of do it all today. Let's get rid of her picture. But to cover the first question that we had was, I have recently been laid off and have been offered Cobra. What do I do for health insurance? Well, these questions, like I said, they kind of come into me through the week, and I use them. And to kind of educate folks a little bit on Cobra is, if you are let go, you don't even have to be let go. You can quit your job. But Cobra is offered to those that leave a company that is at least 50 plus employees. Some group plans that are considered qualified health plans is 50 to 100 folks. Cobra is offered to those employees. And actually, I had 2 calls this week on this topic alone. Both folks worked for fairly good-sized companies and were let go due to downsizing, and that was unfortunate. And they were both offered a severance package, and a lot of folks will see that in a severance package. This Obama, they have a choice. It is a life-changing event, so they can either do the Cobra that is offered in their severance package, or they can sign up for a new plan. And we're going to kind of answer some of that. Those included what they needed. Those included what they needed to do to sign up for Cobra health insurance. And they called me and asked basically, what did this mean and what should they do? And here are some of the advice that I'd given them. First, Cobra is prone to be very expensive. It's sometimes more than what you could get on an open market. So remember this as well, is that I explained to him, is that Cobra is also for a limited time. It's not a health insurance plan that one would stay on and could stay on for a long time. It is strictly there to bridge, like you've seen that picture there. It is really just to bridge an old health plan to you get into a new health plan. And so like I said, a qualified health plan is for those that have a group of 50 to 100 people, and so it can be offered to you. And in many cases, you have to pick up the entire tab, which means when you work for that company, they pay probably 50%, and I've actually got some groups that the boss pays 100%. But you would have to pick up the entire tab for that Cobra group or that Cobra plan. Plus, there's always some kind of administration fee, about 2%. I also explained to these folks that you can have it up to 18 months, and a spouse or dependents in some cases can be covered up to 3 years. So if you are one that got offered a package because of downsizing in your plan as you left, they could get it a little bit longer until you got on your feet and got another job. Another thing I offered to them, or I explained to them, is you can sign up for an ACA plan. Now that is Obamacare, and there is a certain time. So I want you guys to be, this is that education, is that if they don't take Cobra, I told them that there is special enrollment, and that special enrollment period pertains to them because they've lost coverage. But that could be, with our new ACA plans, it could be as much as Cobra now. I've seen these rates, and so you need to look into that. So I gave one of them a quote, and again, Cobra has an 18-month. The ACA law says that you have up to 60 days. This is something you do hear. You have up to 60 days after you lose coverage. So if you're Cobra, if you don't take Cobra, you got 60 days from that time you were terminated from your job to get enrolled on the ACA plan. If not, you've got to wait until November 1. Remember, open enrollment for anybody to get on an ACA plan, aka affordable or Obamacare, is only between November 1 and December 15th, even though coverage doesn't start till that January 1st date. And also, don't forget, we have, I've got a lot of slides, and I need to be pulling these things up. The other thing is if you, there, I think right there, it talked about special enrollment time, 60 days, you'll see that in there, 60 days. But here's the other thing, is this duration. It's a limited duration plan by Arkansas Blue Cross and Blue Shield. So you could do one of those plans instead of a Cobra or instead of an ACA plan if you're healthy. That's the key thing. And these things are a lot less expensive than any of them. I talked about earlier shows about this. The plan is called a Complete or Complete Plus plan. And I'm telling you folks, this thing is great. But the big BUT is you have to be able to be insurable. You can't have be diabetic. You can't have sleep apnea. So there is some limitations. So keep that in mind. But by calling me, I can help you out there. And one of the things right here, you're seeing eligibility. This one gentleman, he said, I think what I'm going to do is, he's real healthy. I don't think he's going to, he might take his Cobra, but he asked, how young can you be to get this limited duration plan with Blue Cross Blue Shield? And I was reading through the eligibility, and you see it right there. You can be as young as 6 years old, and his son is 16. So this was something that was pretty darn exciting, if you ask me. And so we'll just have to wait and see how that plays out. So in closing, these folks had to decide for themselves if this is what would work best for them, and they would have to pull the trigger on their own. An ACA plan, you know, go ahead and sign up for Cobra or limited duration and until they get a job. You know, Cobra is, again, they're just to provide health care, bridges across until you get another plan. Let's move on. Okay, there was another question we had asked is about boats. Boats. It's getting that time of the year. And the question that was posed was, my boat insurance is coming due. What should I be covered for? Good answer. That's kind of a loaded one in some sense. I started writing quite a few different scenarios that came to mind. And one of them, the first one was, is how much personal items will you have on the boat at one time? And do you have a homeowner's or renter's insurance policy? Why I ask for that is if you have your $2,000 digital camera, everybody seems to have their cell phone. You've got your towels, your sunning tan, your glasses, but if you got Ray-Bans that might cost, you know, $200. That's what I'm referring to. If you do, then your homeowner's insurance, or even if you have renter's insurance, that personal property is covered on your boat insurance. But here's the thing, these boat insurance policies, I write them, and they're very inexpensive. I mean, the last one that I wrote, I think we covered $10,000 worth of personal items. And things like, because this particular person had a very expensive depth finder, and that's not covered underneath the boat itself and the power plant, which is the motor, so that was covered in there. So I would advise or look at that, and that's, again, having an agent that will ask the right questions and listen and learn a little bit more about your situation. Here's another one. What kind of lake will I be on? That's important. If you're on Lake Hamilton, the chances of you hitting another boat or a person, let alone the docks, I mean, that, I call that the Gulf of Mexico. I promised myself I'd never take my boat back on that lake, and I haven't. I haven't been back. It is just terrible on weekends. So think about liability. What are my chances on a busy lake that I'm going to accidentally hit somebody, hit another boat, and we all know how those lovely jet skis swing around us. Another one, do I go on a lake during all the summer holidays? So if you frequent every weekend holiday during the summer, Memorial Weekend, Labor Day, 4th of July, then that risk is a little bit higher for you. So having a good policy that has, you know, at least $100,000, if not $300,000 in bodily injury. You hit another boat or a party barge full of, you know, small grandkids, there's going to be a lot of damage, not just done to the boat, but to those folks. And so if you are a frequenter to the lake on those 3 popular days, I would be looking at a higher liability coverage on that. Do you trailer your boat, or do you leave it at the dock? Again, if your boat falls off your truck as you're trailering it, the truck insurance liability is what pays in case the boat hurts somebody. If it's in a dock, now we're looking at theft of personal property. I know we had a boat at Eaton Owl, and we always kept quite a bit of stuff on the boat. You know, we had some nice full body, or, you know, nice leather life preservers and items like that that we always left in the boat. So you have to think about that. Those items, again, could be covered through your homeowners, or you could just add that to your boat insurance. So I do look at that, and I'm telling you, it's a lot cheaper, you know, running it through that way. Here's something that people don't think about. Do you own a business? Now you're probably going, why does that matter? Because if you own a business, every lawyer wants to sue you because, heck, you own a business. You got money. We know that's not true, but I do ask questions to learn, is this person an owner of a business? Because if somebody is hurt and they do choose a lawyer to represent them, those lawyers are really good at what they do, and they'll find out if you own a business, and if so, you just might find that you're being sued for $100,000 that just now went to $1 million. So I do learn about that. And the last item is do my kids use my boat? That can be dangerous. We no longer have our boat, so I don't have to worry about it. But kids, frontal lobe. So I always say to my kids, frontal lobe. They're not as wise in forethought of the dangers that a boat can do. Just like cars on the road, boats kill people. So if you do let your kids use your boat, then you might need to look at definitely upping more of the liability. So we want to cover, so I hope that helped answer maybe some questions for y'all that these folks called this week about. But to get to tonight's topic is it's vacation time, and how does insurance policies cover my personal items? Now it looks like I'm looking at the clock, so we've got just a few minutes, and I'll get right to it because I don't like going more than 30 minutes on this video blog. But the vacations. Homeowners and renters insurance covers most of a person's personal items, but certain things like expensive jewelry, cameras, Maybe you vacation in an RV or a boat. You know, those things are definitely becoming more popular. But the point of this topic is to educate you a little bit more on what happens. It's vacation time, so we're going to have stuff. So here's something to think about. When you go on vacation, you know, are you going to have some expensive things with you? Cameras, video cameras. Are you going to carry a little bit more jewelry than normal? Most homeowners and renters policies have what we call a stated value, and that carrier that you're insured with, if it's like me, Traveler, Safeco, Encompass, many of these different things, or if you're with a captive company, Nationwide, State Farm, each carrier has a stated amount that they assign to specific things: guns, firearms, jewelry, cameras, that kind of stuff. And you need to see that, look at that first, or learn about that. They can be as low as $1,500, $5,000, and I've seen some as high as $10,000 that automatically come with your policy. But here's the education that goes with this as well, is that if you don't have that coverage and you plan on doing traveling and you want those expensive items covered, that's where we get into what we call a marina rider. Now, I'm not a big advocate of selling lots of insurance that you don't need, but that is something, again, I'm educating you guys about. It's called a marina rider. I've only got a few clients that are higher income folks, and they have items in their home. Not necessarily that they leave with them, but they have items in their home that are they have lots of jewelry. This one person has quite a few firearms, and that stated value that's in their homeowner's policy was not even close to what it would cost if there was a fire. Not necessarily a theft, but a fire that would destroy all those firearms. So that's what I'm educating folks about. Remember this too. If you're on vacation and these things are stolen out of your hotel room and it is covered underneath your homeowners or renters, don't forget about that deductible. Some folks have $1,000. I actually have a $5,000. You know, I play insurance. You know, insurance, remember, my definition of an insurance company is a carrier, or someone that I give or put that burden onto someone else in case I have a loss. So in some situations, I carry some of that financial burden. It allows my rates to be a little bit lower. So look at those things in insurance. Marina rider, they're cheap. I mean, it just depends on your coverage. I think one lady's paying like $100 extra a year for some of the things that she does, that she has on her policy that she wanted covered. So in closing, call your agent if you have any concerns about what your limits are placed on your personal items. And if you can't read your agent, then hey, that's a good reason to give me a call, especially if you're shopping. If your thing's coming up, I mean, it seems like my book of business is getting busier. Homeowners, auto policies are all renewing, those that I have year policies with. It's a good time to shop it. Anytime you stay with the carrier more than 3 years, you're probably paying a little too much. We can't become loyal to these companies anymore. We have to look at the bottom line and find an agent that can shop it. And so remember, and your insurance policies can only be as good as your agent who services them. So I appreciate y'all watching this week's show, and I look forward to talking with you if you give me a call. If not, then I'll see you next week on Understanding Insurance.